Hello and welcome back to Bunnex Investment Group. In this video, we are going to be talking about a very simple trading strategy that involves or requires us to be looking for M's and W's in the market. So the first thing is to actually anticipate the points where we anticipate high probability occurrence of M's and W's. But before we jump to the war video, please check out our free Telegram channel. The link is right in the description box below. On that note, let's actually delve into the content. So we all know that in the forex market, there are elite guys or big fish, whatever we want to call them, which we call market makers, or some would love to call them the smart money or large institutions. So these guys are there to convince traders to take positions which they will later counter and take off the funds they leave as stop loss. So how do we anticipate where M's and W's occur? So we all know that the market maker cycle consists of 3 moves to the upside or the downside. So on the third move or third impulse, we call these impulses levels. On the third level, we expect to see the market reversing. So if ever we see the market giving us 1, 2, and 3 levels up or down, we expect to see a reversal at the end of the third level. So at the end of the third level, that is where we actually anticipate to see an M or a W on the H1 time frame. So how do we count these levels? We may actually look for days of rise or days of fall. It's up to us. We may also use another method which is called the EMA simplification, which actually simplifies how to count levels using moving averages. But in this particular video, we are going to be talking on how to count levels using days of rise or days of drop. So on this particular chart that I am on, it's odd against JPY, and the first thing that we are going to be doing will be to count levels until we reach the third level. At the end of the third level, that is where we start to anticipate to see an M or a W depending on the market context. So let us have an example. In this case, we can see that the market actually turned from this point. And from that point, that is where we started our count or initialized the levels count. Let me change the color. So in this case, we had a day of rise. As you can see, there are period separators from the start to the end. We had a day of rise. Then after that day of rise, we had another day of rise. And in this case, we can safely say that we now have 2 levels of rise. And at the third level, that is where we are interested to see the market behavior. So a third level was issued at this point, which was the last day of rise. So as I've said, on the last or at the end of the third level, that is where we anticipate to see an M. In this particular market context, we actually anticipated to see first leg or and second leg. In some other context, this is called a double top, right? Let's have another example where we could actually get this particular trade type. So in this case, we had a downward move, right? From this point to there, we actually had first drop, second drop, and third drop. At the third drop, that is where we had this big fat W to give us this particular rise, right? Of course, it might have been difficult for you to actually mark levels since there was a choppy drop in this region, right? So if you find yourself having difficulties in counting levels, you may actually consider taking our course on that particular subject. Then from there, we can start our count again. We had the first day of rise and the second day of rise. Unfortunately, the market did not give us the day of rise. So for this particular strategy, it was a no trade move. From there, we had first day of rise, right? Can we deem this a day of drop? Sorry, first day of drop. Can we deem this a day of drop? Yes or no? It was actually a period of consolidation. Then we had another day of drop and the last day of drop. As we have said, at the third level, that is where we anticipate to see M's and W's, and in this particular context, we had a W and the market went our way. Then another example, we can start our count on any previous peak formation low or peak formation high, which is basically the lowest point that is available before an impulse has been completed. So from this point, we had first day of rise, second day of rise, and the last day of rise, which is this one. And from that, we had this double top, or an M in particular, and it actually went our way. So basically, you'll be trying to be looking for 3 days of rise or 3 days of drop. From there, we actually anticipate an M or W at the end of the last day of rise or drop. The M should be pronounced. You should be able to actually see a proper double top or a proper double bottom, like that. So let's say you are actually facing difficulties in trading this particular strategy. We have developed an indicator that bases on the M15 cycle, the indicator going by the name Portal FX indicator. So this indicator is actually going for $100, and you can actually attain it after making your payment. You can also inquire on this indicator using the link in the description box below. So this particular indicator tells you exactly the only points that you should be buying and selling. So these signals will also be sent to your phone directly for your validation. You can see buy and sell signals, and we could actually take these signals as soon as they are issued, like that. So this is also an alternative if you are actually failing to get good trades in your career. On that note, we come to the end of this video. Thank you for watching. Like and subscribe.